Hey everyone, hope everyone's having a good day. I'm just in the background here trying to fix my squeaky chair. WD-40 ain't doing the trick. I may have to throw this chair out the window and buy a new one. But it absolutely drives me insane when I hear it. So if you have any good chair suggestions, let me know. I wouldn't mind spending like 200 bucks, 300 bucks on a good chair. I might actually just buy one right now. Thought I would hop on today, do a little Sunday stream. It's always nice to do a stream when the markets are closed and it's on the weekend, and you got more time to just focus on things and do better analysis. And yeah. So yeah, let's look at no 3 minute. There we go. So yeah, I thought I'd just hop on, do some analysis, hang out, talk, chat. So looking at my current position that I put this trade on live on Thursday. We're down almost 18%, so we're losing so far, but we're only one trading day into the month, so we got to give it about 29 more days to really make sure if this is a good trade or not. But yeah. Let me throw up the 9 EMA. There we go. Yeah. So, yeah, yesterday, this trade was looking good yesterday. So we could just look at this on like a, I don't know, 15-minute chart. Yeah, so like the first 15 minutes on Friday, we went up 1.25%, and my trade was up like $1,000 profit, and then yeah, it just turned around and just went down. But I'm not really worried about it. We are, so like if you look at, let's see, let me see something. Yeah, so like we're at like the lower end, and this is like our lowest close in a while. So the algorithms, they knew I entered the trade on on Thursday, and they said dump it. No, I'm just joking. We'll see how this goes. I mean, LLY is probably one of the weaker trades of the year. You know, and it makes sense. Like certain times of the year, the markets do better. Like November is a really good month. I think November was so good that we may even have like a humdrum December overall for the markets. I don't think December will be great, but I don't think it'll be bad. So there's a good chance that like nothing, December may be a pretty boring month. A lot of the tech stocks, AMD, NVDA, they like to rally, October, November. And then again in like May and July, I think. They typically rally around those times of the year. So like right now, the markets are a little bit more humdrum. So, but there's a good chance. There's still a good chance, good enough of a chance of LLY going up this month that I put some money at risk, and we'll see how it goes. I mean, at the end of the day, the markets are random. They're completely random. So, there's only so much you can do, and you kind of got to let the markets do their thing. You got to let the markets do their thing because that's all you really can do. If you believe in like random walk theory or like anything like that, those types of theories, basically those like random walk theories, like no one knows what's going to happen. All you could do is look at previous data and previous trends and make an assumption from there. Um, so yeah. So hopefully LOY turns out great for this month. Again, I'm down $500 on this trade. This trade, I can put up net lick just so you guys can see. Add that, and I want to move this. Let's move this to P&L percent, P&L open. I guess we can move it there. Yeah. So the net lick on this trade's $2,470, and I paid. How much did I pay for this trade? I bought this 1520 times 2 contracts, so I paid times 100, $3,040 on this trade. So down slightly, but can you get liquidated in options before expiration date? No. That liquidation is more. That's with futures. Liquidation you got to worry about with futures trading. Options, no. I guess the closest thing to liquidation for an option would be getting assigned, but that's only if you sell options. That's like the biggest risk of selling options is getting assigned. So no, but you don't like this trade. This trade can go against me 100%. Like I can have a negative 99% on this trade, and that's it. Like that's what I lose. Like I only lose what I put into the trade. So that's one of the benefits of going long calls or long puts. You basically you have you already adjusted your risk with the amount you put into the trade. So like the most I can ever lose on this trade is the amount I put in. So I put 2 times 12 or 15, 20. So I put $3,040 into this trade. That's the most I'm going to lose. Liquidation involves margin. So like an option, futures contract. I mean, there's plenty of YouTube videos and educational content out there explaining futures, and they probably can explain it way better than I can. But usually with futures, if you get liquidated, it's because you blew past your margin, and then you actually go into debt. So you lose more than you even put into the trade. So, or you can go into debt. So you got to be careful. Like the financial products, especially with futures, you really got to understand. If I go down negative 100%, will it get closed? No. But okay. So I mean, that's a great question. So let's say LLY goes completely against me this month. Okay, and you see this market price, mark 12.35. Like if we can look at the options chain right here. So if I go down to maybe let's go to a closer or 0 DT or 5 DT. So you see here, the data is a little wonky, but like you see how like if we go a little far out of the money here, like you see this contract here, 670 call. The ask price is $15 or 0.15, and the sell price is 0. You can't sell for 0. You have to have a buyer at least like 1 cent. But at that point, like the contract's so worthless, you might as well just leave it open or try to sell it if it comes back. If it's $0 and you can't sell it because that bid price is 0, then you just let the option run till expiration, or you could just set up a sell order at like 5 cents. So as soon as the price jumps up a little bit, you could sell. But when you go long calls, everything's cash settled. So it's when you start selling options, you go short, right? Like let's say I sell a call. Okay, now you're taking on. Now it's a different animal. You really got to know what you're doing when you sell options. Even like credit spreads, anything like that, or debit spreads. But no, if this goes down 100%, then it's down 100%, and that's it. So, yeah, no problem. Good question. Yeah, I like those kinds of questions. They're important to know. I mean, like options are confusing, but like I've gone into pretty complicated option strategies. Um, and really, you're just limiting yourself once you start selling options. And people say, "Oh, well, you know, you have a higher win rate when you sell options. It's easier to make money that way. It's more consistent." But people don't tell you with selling options, like if the market goes against you one way or the other, you can lose a lot of money, especially if you don't like if you're selling naked. Like if you let's say you did like a, a short strangle, um, like far out of the money short strangle, and the market goes up or down significantly, um, you could find yourself in a lot of trouble. Like you got to be careful. So like that's why you hear these like horror stories about people like going into debt and like you know throwing in the towel. You have to understand how that stuff works. But that's why I just like going long calls or long puts because your risk or your risk is limited to what you put into the trade. Just like you, as if you bought like a share of a stock. Like if I bought one share of Eli Lilly for $584, that's the most amount of money I can lose is $584, right? So your risk is adjusted. You already have defined risk, I should say. Defined risk is the correct term. Um, and your profit potential, in this case for a call, is theoretically unlimited. It's infinite because let's just say Eli Lilly found the cure to cancer, and their stock went up like 1,000% in 1 month. Like this call option would, the profits would be infinite. Like I'd probably be a millionaire if it went up that much, multi-millionaire on just one trade. That would never happen. I would like to, but I would like for that to happen, and it'd be cool if a cure for cancer came out like that. Um, but like you're setting yourself up for like your risk to reward is there with a long call option or a put option. Now a put option is a little different because a put option, let's say I bought like a 570 put option, the most you can make on a put option is the value that you shorted at. So like, if Eli Lilly went to zero, the put option, technically the profit isn't unlimited. Like I think we can look at it here. So let's say I bought a 570 put for 13.95, confirm and send, right? I'm not actually trading this, but you could see here the max loss is what I'm putting into the trade, $1,395. And then look at the max profit. I can only make $55,605 on this put option. Still a lot of money, still a great return on your investment. But like if we go to the flip side, like the trade I'm in right now, right, 1255, right? Let's say I'm buying. Look at the max profit, infinite, and max loss is what I'm putting into the trade. So that's the benefit. And going long on a call, you're more likely to make money because the markets tend to go up over time. So you're already putting the odds in your favor by going with a long specific strategy, in my opinion. So, but there's plenty of other YouTubers or educational videos for free, completely free on YouTube that will teach you all these strategies. There's been a million people that have gone through all these strategies, and I think it's important to watch. So I highly suggest if you're interested in learning about different options types, like a credit spread. I think a credit spread, selling a uh, selling a call at a 610 strike, let's say, and then buying a call at one strike out, this would be a this would be a 10 strike spread. You know, understanding how this works is great too. I used to trade a lot more credit spreads on like on the lower DTE on like SPX. I think it's great to learn, but I think that the profit potential is not that great. Also, it's a lot more stressful if the trade goes against you, because losing on a credit spread is not good. Like, the point of a credit spread is to win at a high rate. And when you lose on a credit spread, it takes a while to come back from that loss. So so yeah, right now I entered Eli Lilly, and it went down. So we're only down 18%, which is a lot. Like, that's a lot of money to lose, I guess. But for an options contract, you definitely need a stomach for an options contract, because like the volatility is much higher, but it allows you to make more money. So you're leveraging your investment when you go into an option. AMD recovered a little bit since I sold it, but I think we got a decent price on AMD selling it. But I don't want to like. I know a lot of people have joined my channel when AMD took off, um, and I made like what I think I made like 270% on that trade a few days ago. I don't want people thinking like that's the norm. Um, it does happen. I do make triple-digit returns quite often, but it doesn't happen every month. And there's going to be periods of time, and you'll see if you follow my channel, which I hope you do. Um, and I'll keep posting my trades, for free and showing you guys what I'm doing. You'll notice over time that, there's going to be periods where, I lose 2 months in a row, or 3 months in a row. There's going to be periods where, I only make 50% on the options contracts for the month. And that's reality. Like, people, like a lot of fake YouTubers and traders and people that are just selling you courses, they want to make you believe that you can make significant gains month over month over month. Like, that's not how it works in reality. Um, so you really gotta, like, you know, kind of set your expectations, at a reasonable um, area, and just kind of go with the flow. The market constantly gives and takes. The goal for you as a trader is to let the market give you more than it takes over time. So, yeah. Found app called Strike. You can paper trade options. I bought their GDX call and LOY call. GDX is up. Oh, so you're paper trading? That's smart. Yeah. Paper, and that's the other thing, like paper trading, if you don't have enough money to trade, or you just kind of getting your feet wet, paper trading's great. And if you don't have a software to paper trade, you don't even need a software to paper trade. You can just write down on a piece of paper, like, hey, I'm gonna buy a 610 call at 12.55. Write that number down on a piece of paper, and then, you know, watch it. Just watch the contract. And when the day comes that you want to sell it, or it moves up and you want to sell it, then look at the bid price right here and look at that number, and then just do the calculation on the piece of paper. You don't even have to use software. You can just look on, you know, if you have like Robinhood or something. But the software is really nice because it's a little bit more accurate, and it keeps, well, not more accurate, but it keeps things, more organized. How has GDX been doing? I know gold went up a lot. Finally, um, gold really broke out this month. It's like just a touch away from reaching new highs. It's going up with Bitcoin too, which is good to see. It's funny, Bitcoin's barely at all-time highs. It's like still almost like 50% down. And look at gold. Gold, it's almost like the money came out of Bitcoin and went into gold. And now Bitcoin's trying to catch up. Although gold has definitely underperformed. I'm surprised gold hasn't gone higher over recent years, especially with all the money printing and the federal deficit. But seeing this move in gold is quite scary because it's showing you that now the institutional money, this is institutional money, by the way, that's pushing this up. This isn't retail. These are countries, institutions. They're demanding gold right now, and you can see that evidently on a monthly chart here. You know, we're about to make new highs, so that I'm sure the news headlines, and probably within the next few days, you're going to see news headlines with gold reaching new highs. And I'm surprised I haven't really heard about many news networks talking about it. Maybe one. But gold is going up. How's GDX doing? Yeah. See, this is the thing. Like, you got to be careful with some ETFs because, like, you see how GDX is not even near all-time highs, but gold is. That the reason why that's happening is because GDX is, I think, is it an ETF? Yeah, it's an ETF. So, but they charge a fee, and I don't know if it shows the fee here. Yeah, premium, discounted premium NAV, 0.2. So they're taking 0.2% over time, and this is what happens when they, you know, and they can also issue shares of the ETF too. But you could see over time it underperforms compared to the underlying. So, but yeah, GDX, how much has it gone up this month or last month? 11%. So, pretty good month for GDX. And I understand that GDX is all gold miners too, which are in another class of itself. I have a list of gold miners here, and you can see they're all right now. They're all getting to new highs, except some of them. Some of them have underperformed. But yeah, I'm keeping my eye on these for sure. I know Barrick Gold is probably one of the biggest ones. I know Warren Buffett put money into this, but yeah, we'll see how gold goes. We can look at the gold contract just to see the seasonality. Yeah, so like gold does very well. So it's doing well right now. But in recent years, you could see gold, excluding December 2023, which barely just started, you could see like pretty much every December in the past, gold has gone up. So 5 years, 6 years. So 6 years in a row, gold has gone up. That's an interesting statistic right there. So, and so far this month, it's going up. If you really want to make a lot of money, or you want to have better exposure other than an ETF on an option, you could buy options on futures. So gold, I think I've showed this before, but you buy an option on futures, which is basically the same thing, and you go like you want to hold it for a month. You know, you go like probably with a Feb 24. You buy one of these, although these are expensive contracts. Let's see, yeah, $4,000. So you have to have a hefty account size to float that trade, but you can make a lot of money with options on futures, going with the underlying instead of going through an ETF. But an ETF is a good idea too, if gold moves enough. But yeah, you got to remember that gold miners, they're a byproduct of the actual gold price. The gold price is what drives the miners. So, but that's enough of gold talk. We'll see how gold keeps going. I've been watching it for so long, I've just become bored with it, but like it's been going up a lot now, and not many people are talking about it. Oil's been dropping too, which is nice. By me, gas prices are like $3 now. It's kind of nice, even though I don't drive that much. So let's see how Eli Lilly. So last year Eli Lilly didn't do well. It did well in 21. I think it did well in 2020 again. Did well in 2019. Did bad in 2018. Did bad in 2017. Did good in 2016. Did good in 2015. So it's been a few years since last year was a bad year for LLY, and now it's doing good. So we'll see how that goes. I think one of like the hardest things to understand as a trader is that no technical analysis, no MACD, RSI, moving average, whatever. You can give me any indicator and I can poke holes through it like Swiss cheese. No indicator can predict what's going to happen in a market. The best thing you have as a trader is following trends, looking at patterns over a longer term, and then creating a trading plan around that idea. You could still day trade or scalp if you want to, but like I may try scalping and day trading one day again, but right now I just don't have any time when the market's open because I have a few other responsibilities to take care of during the day. That's why I like to swing trade. Plus, swing trading's way more profitable because you don't have to worry about fees. Those fees add up when you scalp and day trade. Believe me, they add up quick. So, but like if you know, like let's say LOY is a good month for December, or LOY is a good stock for December, then you could day trade it because and day trade it. When I say day trade it, I mean look to go long. Don't even look at put options. Or short shares. You want to be long bias. You want to have a bias before you go into the market. The problem, a lot of people focus on the SPX and SPY, which are great. There's plenty of people that make a lot of money doing SPY and SPX and NDQ, QQQ. But here's the problem with this. Most of the time, SPY is going up, and you could see that evidently on a seasonality chart. But it's such a diversified financial instrument that look at the gain. Like if you just look at the average gains month to month, like look, it's almost flat, like 1%, 2%. The highest month I think average over the past 20 years is April. And November, which guess what? November did good this month. So like if I were going to trade SPY, I would be more comfortable looking at the averages instead of the actual win rate. So like April is a good month because it goes up 80% of the time at a pretty decent average gain. July, 75% of the time, again 2.3% average. And November. So like any other month here, I don't really feel even May. And there's the whole saying sell in May and go away, which is true. But look at May. Yeah, May goes up a lot too. But look at the gain. Now this gain can be skewed by 1 year. That's an outlier. Like let's say in May SPY went up 5% in 1 month, which is a lot for SPY. But over the past 20 years, you have a pretty good idea of when the money's flowing in and out. And I think that's why like people day trading and scalping SPY, SPX, QQQ, like just seeing this data, seeing how flat the returns are, except for a few months, you're better off, trading ranges, looking for reversals constantly instead of trying to follow a trend all day on a day trade. And that's why trading such a diversified financial instrument like SPY, let's say, it's hard because most of the days it's just rubber banding up and down, back and forth, and you don't know what to do. Or maybe you do know what to do, but you're constantly getting reversed on, right? It's almost like that's why like people say like, oh my god, like I'll enter an option or I'll enter a trade going long on SPY, and it's almost as if someone's sitting behind me watching my screen, and as soon as I enter the trade, they do the opposite trade that I do, and I lose my money. That's why. Like the data right here tells you. It's like, yeah, well, SPY is mean reverting. Like just looking at this average month over month, like as a mean reversion trader, you would have a field day with these kinds of numbers, because you would constantly just say, "Oh, SPY is going up right now. I'm shorting it. Oh, SPY is going down right now. I'm buying it." Like you just want to do the opposite. And the problem with a lot of newer traders and people who like, let's say, a MACD. Let's throw up a MACD. The problem with a MACD is by time the MACD crosses green, right? Like let's say October 9th, it crossed green here. You already missed like half the move up. You already missed half the move. But like if you were a little bit smarter, instead of saying, okay, I'm going to enter on this MACD turning green on October 9th, you can look at, okay, what's October do? What does typical? Well, I should word my words better. How does October perform? How does it tend to perform in October? Oh, okay, SPY, right? October, the past 20 years. Oh, October goes up 65% of the time at a 1.4% average gain. Okay, I'm going to enter on October 1st, or I'm going to enter my trade on September, 29th, I think? Yeah, I'm going to enter my trade one day before October starts, right? Let's say I enter right here. Now, this wouldn't have been a good trade, but you would put probability on your side just by entering earlier and try to catch the trend that typically occurs rather than look at an indicator. Now, this one wouldn't have worked. You would have made money, I think, but it wouldn't have been a great entry. Actually, it probably wouldn't be a bad entry if you entered at the end of the day, which I typically do. I always like to enter at the end of the day, but you would have made some money within a couple weeks. But like if you go back to a previous year, let's go to October, let's go to September 29th, 2022, or September 30th in this case. That's the last trading day. And I wanted to hold for the entire month of October. Okay. So retail's looking at the MACD, let's say. Retail's going to enter here. They're going to go, oh, the MACD just flipped green, I'm entering. Okay. But if you looked at seasonality for October and you know that typically starting in October, it's a good time to buy, you would have entered down here. And let's say you held for the entire month. Look how much money you would have made 8%. Opposed to retail, who would typically enter here, right? Let's mark it with a yellow line. Let's say retail entered here on a, I mean, we're all retail, but inexperienced traders that are relying on technical indicators, which are lagging. You're missing the move. Like, you would only make, 2% if you held to the end of the month? And if you really followed the MACD would have turned red, which would technically be a sell signal in the eyes of the indicator, and you would have sold for a loss, or you would have made 2%, opposed to just following seasonality, creating a systematic approach, and just entering simply on the first or last day of the month and holding. So that's why, like, using statistics instead of an indicator, you could see the edge you gain right away, because you're not, the problem with a MACD or an RSI or even a moving average, it's a lagging indicator. So you're entering once the move occurred or half the move already occurred. So you're losing out on gains. It's called liquidity sweeps. Most new traders don't understand dynamic hedging and use worthless indicators. Yeah. I mean, like, I've tried, listen, like when I first started trading, I tried all the indicators under the sun, and none of them worked for me. Even on the daily charts, even on the 1 minutes, everything. It just, like, it would, and they would work sometimes, work, quote unquote work, but it wasn't consistent enough. And I'm sure maybe there's other indicators out there that work good, but a lot of them, they aren't shared with public. They're very hush hush about it. Um, and yeah, like I just, and if you look at like most successful traders, um, I guarantee you they're not looking at um, an indicator, or if they do look at it at an indicator, it's just a part of their strategy. They're just using it as a one other metric. It's just another metric that they just look at, but they take it with a big grain of salt. So, but like if you listen to the news, if you listen to a lot of financial advisors or money managers, very successful guys, if you just type in seasonality next to their name, like you'll notice that a lot of these guys use seasonality. And it makes sense because as a trader, you have to follow the flow of money. And money flows in and out of the markets. It goes into different sectors of the market at different times of the year because different sectors of the economy or different sectors of the stock market have more demand based on human behavior. So, like if you're going to sell ice cream and you want to make money selling ice cream, you're not going to open up your ice cream shop. And let's say you live in a state where you have hot summers and cold winters, right? You're not going to open up an ice cream shop in the middle of January. You're going to get like one person a day buying ice cream. But if you open up an ice cream shop starting in, let's say, June or end of May, when the temperature's above 65, 70 degrees consistently every day, seasonally you're going to be at a better your business is going to be at better odds of making money. So it's the same thing with the stock market. It's supply and demand. You just have to look at the trends and see where there's opportunity, potential. And just because you see opportunity or you've seen things happen in the past doesn't mean it's going to happen again. But if you see it enough, then you can kind of get a good idea of how much you want to risk compared to the amount of times an event occurs or a seasonality or a seasonal tendency occurs. And that's it. And then you just create a trade plan, when I'm going to enter, when I'm going to exit, and you go from there. And then after you establish all that, then you could start, throwing on a 9 EMA, right? Like then you could start looking at indicators from there. But the core of your strategy is based on something completely unrelated to a chart. So that's my little rant, but I hope it kind of opens at least someone's mind, because I've been stuck in the charts. I've been looking at charts since like 2017, and like I'm not going to give out my exact age, but I spent a lot of time in the charts, more than most people at my age. And I live and breathe finance. I literally live and breathe finance. So I work in it. I go to school in it still at a high. I'm going to grad school right now. I'm going for licensing. So it's like I live and breathe it. This is what I do. And I could tell you right now, as soon as I got away from the charts and started looking my own way, looking at seasonal tendencies, looking at the actual economy and how money flows in and out of it, that's when I started catching waves in trends and actually making good profits. So, and that's how most good traders, that's how they do it. Other than that, it's like, it's either you look at trends that happen over a period of time, or you go into more of the data science role and go into quantitative analysis, which is like way, way higher of a skill to have. And it's much harder to acquire that. You need to be basically a mathematician to successfully develop and trade quantitatively. What I do is more of a statistical type of analysis, which statistics is also a great method of finding opportunity in the markets. So, but yeah. So try to like get away. If you're stuck in the charts, if you're looking at like MACDs and indicators and moving averages, put all that stuff aside and just kind of look at things objectively, and try to backtest ideas in Thinkorswim or whatever platform you can backtest in, and just try and look at things in an Excel sheet. Just go from there. So. So yeah, hopefully we start seeing a little bit of green on our screen for LLY. That'd be nice, but it doesn't take much of a move for LLY to create a nice profit. This little move yesterday, which I was talking about it a little bit earlier, if any of you just joined in, but like we went up 1.74% from the open yesterday. Well, technically, since I bought it, it would be at this candle close to this candle high. My position was up $1,000. I think it was up 30%, 33%, because it was up $1,000. So it doesn't take much of a move on LLY to make some money. Conversely, if it goes down a little bit, it doesn't take much to lose money. So that's why I'm down 18.79% currently on this trade, and we're only down what 1.18% so far in one day. So, but I'll also keep an eye on IV, because if IV keeps going down, which I think it did, it probably went up actually if we went down. Usually IV goes up when the markets go down, but hopefully hopefully we start to see some green. Could really use it. But the market is very close to making. I'm looking at the Qs right now. Market's very close to new highs. How far? What's the drawdown currently on this? 3.5%, 3.35%. So, we're literally like a week away from. We could be like 1 week away from new highs on the Qs and also the SPY or S&P. So very close, getting close. And usually when a new high comes in, you start to see a lot of buyers start to get in. So usually what you'll see is a breakout and then a pullback to the high, the previous high, and then we keep going up. So, but we'll see. We don't know. We could be in a recession by next year and the markets crash again. No one knows. So. And the other thing with my strategy, because I'm going long, if the markets go down, like 2022, my strategy did not do well. I still outperformed the market overall, because I think the S&P went down. Let's see, I'll put this on a yearly chart. The S&P last year went down 18%. My portfolio was down like around 15% on the year, so I still outperformed the S&P, but as a long only strategy, you need the market to go up. Which, if you look back, this is why I kind of laugh at short, people who like to go short over time. I mean, it's like, really? Like, this is a chart going back to 1983. How many red candles are on this screen? A handful. So it's like, alright. But listen, if you can short and make a lot of money, and you do it consistently, it takes a special person to do that. More power to you. Do it. But me? Nah. I'd rather just stick with the trend over time. It's a lot easier. Helps me sleep easy at night. Now, one reason why the market has been pushing up, especially the market's been pushing up this aggressively, is because of the 10-year as well. So pretty much since the start of November, which the 10-year has seasonality too, but the 10-year pushed down from almost pretty much 5%. It peaked at 5% almost perfectly, and it came down like 80 basis points. So if we look at, I think if I do TNX, will it pop up? Yes, it will. So this is a great chart to look at. The bond market really dictates a lot that goes on in the equities. You can see the bond market underperforms during, or the yield. I think TNX, is this pulling the rate or the actual? The TNX should be the rate as well. Yeah, the yield. Okay. So this is also the 10-year. So the TNX, when rates go down, that usually means valuations go up, right? And when rates go up, valuations go down. So you can see November TNX, the 10-year yield, 10-year Treasury yield, typically goes down, which means valuations go up. So that's another seasonality that played into November. And you can see December, the inverse happens. Typically, yields go up in December. So it's a little bit harder for equities to, have that type of move we've seen in November. So looking at bonds is very important. You got an alert on 10:30 to go long via options hedging data, where you're looking at options volume, unusual options activity. I've looked into that stuff. I should probably look into that, especially with looking at seasonality, because if I could see big trades being put on before the month start, then I know that there's other people trying to, take advantage of a seasonal trend. Gamma and data profiles. Nice. Yeah, looking at the options chain data, um, I think if you have like your own way of calculating edge within the options chain using gamma and delta, try applying seasonality to it, and do a little back testing and see how much better it does. It could be quite eye-opening for you if you haven't done it already. So what I would assume that you're basically watching like spikes in delta. You're looking for the change in delta, and that signals to you, hey, like there's some activity going on. That makes sense. All right, so that's very similar to what seasonal, yeah, that makes sense. And you can look at seasonal trends within the change in gamma, changes in delta, instead of looking at I like to look at the underlying. So like if I'm trading LOY, I'm looking at the seasonality of LOY shares. But you can do that with the options data too. So that's really smart. You're probably going to get even a more accurate idea of where to get in and out. So really smart. I've yet to find a good website. I know there's Market Chameleon that does a lot of like the option specific data, but there's not many sources out there. Like let's say like TradingView, like user friendly stuff to analyze options data. I guess there isn't much of a demand for it, or it's just so up there that, it's so up there in terms of research and analysis that, you know, they don't want to share it. That's too much edge. They don't want to. A lot of these brokerages and stuff. They seem like they're your friend and they try to help you, but they'll tell you anything as long. They love the day trading stuff. A brokerage like TD Ameritrade or Thinkorswim, they do like YouTube live streams and stuff, saying how like, oh yeah, you can use the MACD for day trading and buy here and sell here. They'll tell you anything as long as they're getting their commission for each of your trades. So be careful with even with what brokerages tell you. That's why, like, if I ever had like a prop firm or an exchange want to sponsor me, like, I don't even want to like touch their money. I don't want to do anything involving myself with them because they're taking advantage of us just as much as like gurus do. So looking into buying at specific gamma strikes above and below underlying price to see where they're adding or removing money. Yeah, that's smart. Yeah. So you're looking at significant changes in delta, which signals to you significant changes in the share price. And then on top of that, I guess you could track volume through there and look at the unusual activity. So yeah, smart. And again, like, doing that analysis, if it works for you and you find edge in it and you find consistency in it, like, do it. But don't, like, I have my way of trading, I have my strategy, and you may have your own. But like, don't be afraid to like entertain other ideas and try to backtest new ideas within your strategy to see if it helps you gain even more edge. I think the worst thing you could do as a trader is become profitable, do well, and then become complacent and not staying up to date with your analysis and not trying to constantly seek a new idea or a little bit more edge, squeeze a little bit more out of your analysis, because that's what's going to set you apart from the rest. Trying to stay one step ahead. So you got to constantly try to improve. That's like one of the main benefits I get from running this YouTube channel. You can take away all the money from what I could potentially make, charging you guys for courses or YouTube ad revenue. You could take all that away. I get more value just by talking to other like-minded individuals and bouncing ideas off each other. Because, like, really, when you have conversations with other people that trade and they bounce your ideas off and you guys discuss, you learn. I feel like you learn so much more from that. Especially if the person knows what they're talking about, because then you cut right to the chase and you cut to what's actually going on instead of looking at a YouTube video showing you how to look at a MACD or something or moving average or some dumb scalping strategy that's being taught by a kid with a perm, finna bussin'. So 4609 on ES this week. Should see 4640 potentially. ES, we're already at 4600. 4609. I mean, it's already there. I mean, yeah, just looking at this, like, I know, but like, we can also look at can I put ES on here? I'll just put SPY. It's no different than ES, same thing. If we look at like December does well. Now the average gain's lower, but that doesn't mean anything. But yeah, and if you're seeing like in your data, like from Gamma or Delta, in your own analysis, you're seeing edge there too. There's a good chance that this is just going to keep going up. So, but yeah, December's typically a better month for ES or the S&P overall. So you're probably right. If we keep going up, listen, once we get to new highs, it's going to hit the headlines, and people, especially retail, they're gonna go, oh my god, let's buy more. It's making new highs. It's no different than like Bitcoin making a new high, right? Like if you look at Bitcoin, this is great. Like this is a great example. Bitcoin's a great example of human psychology. You know, like I bought Bitcoin. I'm not joking when I say this. I bought Bitcoin when we were at like the 3,000 to 4,000 range back here, and you could look at it on a weekly chart here. As soon as we made a new high on Bitcoin, right here, look what happened to the price. It was like, all right, we're going up good, we're going up good. Okay, we're about to reach the new highs. Oh, we reached the new. Oh, buy, 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 and it's just like it just takes off. Same thing's gonna happen here, but we still have a little ways to go. Still have a little ways to go. But we're about to make a new local high, so we may get a little bit of that effect. Now the other thing is, I like to look at this stuff. Like if we're looking at ES on a weekly right now. How many weeks can ES go up in a row? Like we've had 1, 2, 3, 4, 5 weeks in a row of upwards pressure, and then a little bit of consolidation and bouncing up and down. 1, 2, 3, 4, and we may have a fifth week of green. So like statistically, you can look back in history. 1, 2, 3, 4, 5, 6, 7. I mean, these aren't even green weeks here. You can see here we're down negative 0.15%. But like, the market can only go up for so long before it consolidates and kind of just bounces around for a little bit and then goes higher. But another thing is volume. Volumes. I love volume on volume. You got to be careful with volume sometimes because it can be subjective. But volume, high spikes in volume tend to mark tops and bottoms in price, but not always. But it can. So if we see a big spike in volume, let's say next week or this week, we're only is this the current week? This is the current week, right? Yeah. Oh no. Okay, well the week ended. I'm losing my days. But you could see, like, let's say this coming week we go up and the volume spikes, there's a good chance that, we top out. So yeah, that's just another thing. But I think we're going to make a new local high. When I say that, I mean we're probably going to get above like 46.34. So we'll probably go up another 30 points this week. And then maybe make a little bit of a newer high, consolidate, and then go even higher. And then we'll be talking about new highs overall. So 4,700 area for 12-15 expirations. You know what's the one thing I never really looked at? I never looked at options on futures for ES. Do they even have them? They do have them. See, if I were going to trade ES or SPY, I would probably look at options on futures. The other benefit, now I'm going for like my CPA and stuff. I'm not an advisor, but I am learning about. I already have a finance background, and I have already been working in accounting, but I'm also getting a higher degree in accounting. So I'm learning a lot about taxation, and I've already known about this, but the 1256. If you look up 1256 rule, tax treatment, I should say, on options, you could do a 60-40 special tax treatment. So basically 60% of your capital gains are taxed at a long-term rate, so a lower rate, and then the other 40% of those capital gains are taxed at a short-term rate. So you actually save money on taxes when you go with, and I'm pretty sure future or options on futures get the 1256 tax treatment. Let me just confirm that. 1256 tax treatment. So futures, forex, and options. Well, not all options, only SPX. So we got to be careful with that. Select this. Oops. Options on futures. Yeah, so what I'm seeing, this isn't financial advice, I'm not a tax advisor. But what I'm reading is options on futures contracts were generally subject to 1256 tax treatment. So, yeah, it's a little edge there. ES and SPX. Yep. Yeah, I used to trade the same stuff as you, but I moved away from it. I just like I moved away from it. I couldn't deal with it. Maybe if I develop something on my own time for ES and SPX that works good, maybe I'll come back to it, but I'm finding much more luck just trading equities, like individual equities. So there's so many different ways you can make money in the markets. That's what makes it so great. Everyone has their own preference, and I'm not here to bash or tout, a certain strategy. If you like gold, you like gold. If you like SPX and ES, you do you. I'm just here to show my strategy and have a good conversation and just discuss. So it's all good. But yeah, I've traded plenty of futures contracts. I've done NQ, ES. Never done oil, but I've been watching oil for a long time. But it's fun. It's really interesting, and I think it's great to learn. Even if you don't do it forever, it's still great to learn and know it. And yeah. You developed an options dashboard to break down the data. Wow. That sounds like a lot of work. I know how that stuff. Developing data points and ways to view uh, edge. It takes a long time, especially if you're running like I don't know how many years back you're looking, but like if you're going like 10, 15, 20 years, it could take a long time. Oh yeah, I spent basically every night, not every night, but like most of my nights during summer because I didn't have any school and obviously I only work so many hours, but I spent a lot of time in Excel and Thinkorswim. I wish I knew how to use Python and like computer programming because I could probably expedite my work like tenfold, but I'm not smart enough to do that. But that doesn't mean I can't do it still. But yeah, I know how it is. It's very painstaking, but it's so rewarding once you find success in your data. It's like it's a really good feeling. And not only is it a good feeling to find, edge and find something that works, but once you apply it in real life with real money and it works, you feel like you're on top of the world. Only been live for an hour. Okay, cool. Um, oh, you use Python? Oh, I used to play with Python with a Bitcoin, like trade analysis with Bitcoin, like looking at like there's a guy on YouTube that I used to follow a lot, and he is a quantitative analyst. Um, Benjamin Cohen. I started watching his channel. He really got me into like analysis, like deep analysis, um, but not quantitative, but like statistics. Um, I started watching him when he had like barely any subs. Oh, is my stream going down? Nope, we're good. I started watching him when like he barely had any subs, and he had like Python scripts that would like show you like where Bitcoin was the riskiest and where it was like least risky. And I kind of like built my own I kind of copied what he did, but I applied it to like different alternative coins and stuff. This was back in like 2019, like probably like 4 years ago. I can't believe it's already been that long. But yeah. But obviously, I moved away from that stuff. I went to something a little bit more simple, something more within my capability. Um, but yeah, but so like when you find something in that data, it's really interesting. But yeah, I may have to look at. I definitely am interested in options on futures. Definitely interested in it. The only problem is I really can't backtest it that well. Because when you go into on demand for Thinkorswim, it doesn't show you contracts going back. It You can set the date to like 2017, let's say, and it will still show the contracts for current, like the 2023, 2024. So I have to find a different way to backtest future or options on futures. So that's the one thing that I'm having an issue with right now. Well, not an issue, but I have to find a workaround. So if you have any suggestions, let me know. Uh, I used to be really into crypto. Um, Lots of altcoins. My friends and I, we bought this altcoin, Chainlink. Uh, we bought this altcoin like back here at like 30 cents. We made so much money with this ripping up to $50, and now it's going back up again. So, but I sold like a lot of it like around here, I think. So, but kind of wish I held on to it, but it is what it is. It's going back up, and we'll probably keep going up. Okay, so use SPX. Yeah. So yeah, you can use the same edge on SPX. Yeah. Um, I think I did some back testing on this. Was it the theta that's really high? Yeah. Hmm. Looking at the theta, because I remember like whenever I'd buy an SPX option, like that. I guess that's why SPX is so popular for selling options. I feel like I lose so much to theta with SPX. I don't know if it's because it's cash settled, it's just more liquid. I don't know, but I always feel like I've never had good luck with SPX, and I've lost a lot of money through SPX. So I've kind of moved away from it. Maybe it's because it's like just so diversified because it's a index, but TOS API to fetch the data. What, for futures or just SPX? Because I was looking at I wanted to look at ES futures, options on futures for ES, I should say. That was my next interest for SPX. Okay. Yeah, if I wanted to do that, I could probably just. I'm sure there's someone out there that's already made a YouTube video or someone on Google that explains how to do it. But I, but yeah, SPX is nice because you can get that 1256 tax treatment, which can save you a lot of money in taxes. Always got to pay your taxes. Imagine there were no capital gains tax. Oh my god, I'd have so much more money. I'd have a lot more money right now. But it is what it is. Did Microsoft pass Apple? Because they were pretty close recently, but I think Apple kind of took off. 2.783 against 2.97. Okay, so Apple kind of pulled away from Microsoft in terms of market cap. They were about to cross each other. They were pretty close, and then Apple kicked back online and started going higher. I really I really I'm kind of annoyed by this. I don't like looking at this chart for Apple because I lost money in October on Apple, and then it ripped back up. I probably would have made a lot of money on that options contract, but unfortunately, well, not unfortunately, but I stuck to my plan and sold my option as planned, and that's it. Moved on, but would have probably made my money back. But hey, had a good month. Had a good month for November. I will take it. I want to see something. Let's do a little back test on ES for the month of November. See, I could back test futures, or options on futures for ES, but only for like 1 month. So we could look at November 1st or October 31st. Let's go into on demand. Hopefully my computer doesn't crash. My computer likes to crash on me a lot when I play around with on demand. We see how like right now we're on August 2021. ES, like it's showing the closest DTE to 0 is December 23rd or December 2023. So yeah, it's kind of annoying. But I think we could back test at least for November and just see what we would see as a gain for like a really good month on an options on futures contract. So let's go to October 31st and enter a ES. Probably would have gone with like this, 45. Open this up to all. These contracts are expensive. I'd probably go with like this. Wait, how is that only... Is it only 3,000? Is this a standard? Hold on. Am I not looking at the right? Oh wait, hold on. Hold on. Was it this one? Here we go. Okay. So if we held on to this for a month, what would be our gain? That's pretty good. 326% on with the futures on options on futures contract for ES. And how big of a gain did we have? 8%. Wow. So yeah, I need to find a way to backtest options on futures data going back. There's got to be another platform I can find or pricing data. Someone's got it out there. Someone's got the data. A lot of times for this kind of data, it's so specific and niched that you have to pay for it. You have to pay to get the data. So, which TOS, I'm surprised that they don't have this data. I've given them enough money through commissions, so they should have this stuff for me already. All right, let's back out of this. Okay. But we're sticking with LLY for now. Good old LLY. What's DXY been doing? I think it's so much easier just to look at a monthly chart. The daily chart's a little too reduced. Now, if there had to be another, I guess, strategy or like an analytical way of looking at information on a chart, other than like MACD or like stupid indicators, it would probably be, which this is all over YouTube, but like looking at supply and demand. But even this stuff is hit or miss, you know. Like this is technically supply here. You can see we got it rejected a couple times from resistance, and then we came down into it, and now it's acting as demand and trying to move back up on DXY. I know a lot of guys use it for ES, more on like a weekly. It's like this is a good example right here. So if we look at, if we just draw a box right through here, you know, we initially found support here, resistance. Technically, we broke through it, but we came back down. Wick to it, resistance, 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 then broke, came back down, support, bounced. So, I mean, like supply and demand zones, and like even up here too. Yeah, so like right here, like right now we're fighting through some resistance. You can argue that we're still in it. You know, you came up here, resistance, 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 and now we're, what's happening here? I don't know. Is it going to resist or is it going to break through? It could break through, especially with seasonality in play. I mean, the winter months, basically from kind of October, November until April, the markets tend to go up. During the summer, the markets, you know, they kind of just bounce back and forth. They don't really make big moves. They can make moves though, but I mean, but even like a strategy like this, if you follow supply and demand zones, apply some seasonality to it, right? Because then you have a better idea of if it's actually going to bounce or if it's actually going to break through based on seasonality. So that's why I think taking any strategy, applying a little bit of seasonality to it, it helps. It'll put you ahead of the game a little bit more. It'll give you a little bit more edge. And who doesn't want some more edge? I know I do. So I'll see how. Right now I'm kind of busy with school. Well, I'm going to be next week, next 2 weeks basically, because I got finals. But hopefully I can hop on a stream. Try to hop on if we have a good day for LLY. Um, it's just I'm so busy during the day. I like to do streams at night too. Maybe I'll do a stream later tonight. I know right now I'm kind of streaming at an odd time. Um, typically have more people on stream right now talking to me right now, but it's a Sunday afternoon. A lot of people are out doing things, so maybe I'll be on later tonight around like 8 o'clock, 9 o'clock after dinner. Um, so yeah, I got a couple things to do today, and plus I'm getting a little hungry. So yeah, it was nice chatting with you too, Jay. It was interesting you pointing out a few ideas and looking at things, especially with the gamma and delta. That was cool, man. So yeah, thanks everyone for watching. I'll talk to you guys soon. Maybe later today. We'll see. So yeah, happy trading. Have a nice Sunday, and talk to you guys soon. Peace.